good afternoon, everyone. My name is Dorota Zablocka. I'm the founder and managing partner at Cryptocurrencies Group, and I have the honor and pleasure actually to moderate today's panel on the future of the cryptocurrencies in Europe, broadly saying. We will try to touch on the most interesting and practical topics that are coming from our great panelist practice from the Polish, European, UK's area. So hopefully you will enjoy that. And let me start with a brief introduction of our great panelists. On my left side, Artur Granicki, the Global Head of Legal at Master Ventures Group, co-founder of Seabridge Fund, and former Director of the FinTech Department, Poland's Financial Supervisory Authority, KNF. He brings an international perspective on regulatory trends and Europe's position in the global crypto market.
Hello, guys.
Then we have Maciej Grzegorczyk, well-known attorney at law and tax advisor in Web3 space, managing partner at KHG law firm, with nearly a decade in cryptocurrency legal space. He, and together with his team, provides guidance on regulatory changes, including MiCA and EU-wide compliance challenges. We have also with us Maciej Hussakowski, the CEO of Optima Creative Ltd, a UK-based expert in crypto taxation. He has been active in crypto space since 2014 and specializes in helping investors and businesses navigate the UK's complex tax regulations.
Hello.
And last but not least, Pawel Kuskowski, Chief Strategy and Product Officer at Stabilum.com, former CEO of CoinFirm, which he successfully exited to Luka Tech, and a leading expert in AML and stablecoin regulation. He has extensive experience in financial compliance, having worked with institutions like UBS and Royal Bank of Scotland. Please applause for our panelists. And let's start. First question goes to Maciej Hussakowski. We have two Maciej, so I'm going to use also second name. Maybe let's start with UK. In UK, the taxation remains a major concern for crypto investors. Could you please give us a clear picture of how crypto assets tax regulation can currently work in the UK?
Yes, it's basically a bit complicated, but I think it's very logically meaning, because in UK you have to pay taxes for all profits made on crypto-to-crypto transactions. When you make profits or make loss, so you can declare loss. Or if you trade crypto to stablecoin, you have to also pay tax for this, crypto to fiat. But basically in UK you have like capital gain tax regulations, so you pay tax and you make tax return every year on a system called self-assessment. So you declare like your profit in self-assessment like a individual investor for crypto. And also it's like if you do staking or airdrops or mining, you have to pay taxes on different regulations called income tax. So like self-employed, like individual business. And basically on crypto to crypto or crypto to stablecoin regulations, it's tax-free allowance, £3,000 per year per person, or 6,000 for marriage if you have a wife or husband. And taxes are 18% of your profit per year, up to £50,000 your all income. And over £50,000 it's 24%, but that was changed in last year, in the 1st of November. Those taxes been before 10% and 20%. So the UK government made those taxes higher and higher. And basically that tax-free allowance also Three years ago was 12,300 pounds. That was second tax-free allowance on capital gain tax. Then they changed to 6,000 and this year 3,000. So basically they want to make money on crypto investors.
Definitely it sounds like a lot of regulation, but on the other hand, at least we see such pretty much clarity in this sense. But let's move a little bit broader beyond the UK. Artur, next question to you from the international perspective. How do global organizations perceive the EU regulatory approach under MiCA?
That's a hard question because some of them are like Binance, like Kraken, like the most recognized ones in the European Union. They are trying to find the best jurisdiction to start the process of MiCA.
Definitely, yeah.
But most of them are, let's say, holding on to see what will happen. Because right now we have just transition period. For some countries we have 3 or 6 or 18 months. For example, in Poland, as you probably know, we should have 18, but for some reason,
see. It's still a little bit of secret of mystery.
6 months. But to be honest, lots of companies are waiting to see what jurisdictions will be most friendly, and because of reverse solicitation, which give us a possibility not to apply for the license, as you all know. So most crypto companies are worldwide. So most of them just hold on to the guys that they have. Try to do international marketing, don't approach Polish or French or generally European investors, clients, and so on. So they are probably preparing to file for the MiCA in next year or maybe later if the jurisdiction will be good and they will know what to expect. Because, for example, in Poland, I don't think anyone expects lots of MiCA licensing and easy process.
Mm-hmm. And do you think that this kind of approach, because you mentioned one of the, I think, most interesting topics under MiCA, which is reverse solicitation rule. Do you perceive that international organization would also be open to operate under this reverse solicitation rule? So they're more willing to open their offices outside of Europe and see how MiCA regulation is going to be implemented or in Europe, or they rather want to wait and start their operations directly in Europe under MiCA?
Okay, so I can tell you what's our approach in MP Group, because we have like over $4 billion worth of companies in our ecosystem. So most of the companies that were operating in Europe that now just stopped marketing, moved to Caymans or Panama, mostly Panama, and just waiting what will happen. So if we had some launching platforms or node companies or some other investments, most of them are just waiting what will happen and using reverse solicitation just to accept European users, but don't do marketing. But obviously in our portfolio we have Kraken, we have Circle, so those are the huge companies that needs to keep operating, and they are filing for the license or have a license. So Circle was the first stablecoin with an EMT license in Europe. So we are proud of them that we have in our portfolio companies that are operating, but this is different situation. Those companies cannot afford to lose the market share because the competition is too tight. But most of the companies, especially smaller ones, they are just laying back and looking for reverse solicitation to fill the gap before the license or before we can decide in which country we should have the license.
Sure, thank you very much. And because we have already started talking or discussing around MiCA, which is one of the biggest change in the European regulatory landscape, the question to Maciej Grzegorczyk. about MiCA, because it introduces a more structured regulatory framework in Poland and across Europe. So from your perspective, because you're working both with projects but also with individuals, what are the biggest changes for individuals, cryptocurrency investors, under this regulation and also under the TFR regulation?
So many lawyers will tell you that it will be just safer for individual investors. I doubt in it, because most of crypto companies, they seek for the holes in these regulations. So I really don't think it will be much safer. Still, if you deposit crypto on just to a crypto exchange, many of you think that this crypto exchange stays on their wallets, etc. In practice, I can tell you what's happening on the backstage of these crypto exchanges. They take your crypto and they put it to some liquidity pools, etc. They put it at risk. And of course, in MiCA regulations, there are also legal provisions that these crypto companies cannot use this crypto anymore for own interests. And how do you think, what crypto companies, what's their idea right now? So their idea right now, and it happens also in the biggest crypto exchanges in the world, they do wrapping. Wrapping, I mean like wrapped Bitcoin. They issue the same crypto on their blockchains, and they take your crypto, they're converting your crypto to some other wrapped Bitcoin, wrapped USDT, etc. And if they collapse, then your crypto are just worthless. They worth nothing. They are gone forever. You still can withdraw this wrapped Bitcoin, but it doesn't worth anything if this exchange just collapsed. So I don't think it will be much safer due to MiCA and due to TFR. These regulations were prepared by authorities, by politicians, by people who don't work on a crypto market. If crypto industry will be involved in preparing these regulations, they will be much better and much safer for investors.
Is there anything such an individual investor could do to secure their money because of MiCA to be more secure on this market?
And the only way you should do as an individual investor is to keep your crypto on a cold wallet, so Ledger, Trezor, etc. That's the safest way. Of course, if you need to do arbitration or you just need to buy crypto and you wait for changing the value of crypto, then yes, you need to keep it on a crypto exchange. But immediately, if you can withdraw your crypto to a cold wallet, that's the safest way.
And we do not locate any product, just to be clear. Okay, and another question to Pavel, because you have very interesting perspective, because currently you are working within the team that works on the stablecoins, so because we have already touched on stablecoins team. Also looking at MiCA, we can see that one of the key topics is the role of stablecoins. So from your experience, from your perspective, your company's, your organization perspective, how do stablecoins fit into this new regulatory landscape?
Hi everyone. I think stablecoins actually are the best what happened under MiCA. This is clearly, for some reason, I understand the background, Libra, and that effectively MiCA was created to protect from Libra. And much to your point, there was involvement from crypto industry when MiCA was prepared. INABA was one of the British association was involved in creation of the MiCA rules, and I was working on this as well. But it's different to give feedback to the regulator, and it's different to get something out from this which is meaningful. It's completely different things. But in terms of stablecoins, I think it's the only thing that is meaningful and that's going to work. At Bilon, we see a lot of companies from abroad which are interested in European market and in stablecoin issuers. And that's something that, the applications of stablecoins is could be completely different than we expect at the moment, right? It could be serving ecosystems, and it could be serving, different, let's say, utilities on the market. And in terms of security, I think this is also something that you, Maciej, pointed out. That's the only protected asset, because under MiCA you need to have, for every issued stablecoin, you need to have the same currency, same amount of currency in the bank account. So you cannot speculate on this front, and you need to be able to come to, let's say, issuer and redeem your assets anytime you want, and the assets must be protected in the same way you would have your, let's say, deposit protected. So that's something which I think is very, very helpful from the let's say, security perspective, and that's going to be something that is going to be one of the winning components for stablecoins in Europe and outside Europe. So I think that's good. What happened under MiCA, probably by accident. I don't think it was intended, but that's something that I see as a big market and big potential.
Definitely yes. If you are observing current trends in crypto, in 2025 it looks like stablecoin is going to be one of the leading topics, leading areas to look at. So very good to have somebody, the organization also giving the perspective from the stablecoins project, because I think it's very useful also to understand how it works from the let's say, from the kitchen side. I would like to get back to Maciej Hussakowski, because you have mentioned some complex tax rule for tax calculation, but it's pretty interesting because in many jurisdictions we are facing lack of such regulation, and this is why, for example, Maciej Grzegorczyk being in this space may tell you from his experience for sure that many times it's needed to apply for individual interpretation to know how to calculate your taxes. But because you have already shared some details, I would like to go a little bit deeper and ask you about crypto-to-crypto transactions, whether they are particularly a challenge for investors when it comes to tax reporting, because for sure you have great experience in this field. And if you could share how can individuals correctly calculate these transactions into fiat for their self-assessment tax return under UK capital gains tax regulations.
Yes, it's pretty simple, because we have softwares like Coinly, for example. It's like a software created for crypto investors that they can upload CSV files from exchanges or connect API key to download those transactions to this software, and this software calculates all those transactions to GBP pound, to British pound. And I think Coinly probably will operate in different countries as well. They operate on that kind of countries with basic same different regulations. Different countries has different regulations at the moment, but I think in UK they create those regulations since 2018. Tax on crypto assets, and because in Poland is different, only crypto to fiat you can declare and then pay taxes. But if you go through crypto to crypto, it's more complicated. So we are accountants who are not doing this by hands. So we not calculated those transactions because it's almost impossible to. For example, we have clients who has 10,000 transactions per year on crypto exchanges, and 10 different exchanges, swaps and unicorn swaps, DEX and stuff like that. So it's almost impossible to make these transactions hand by hand or on Excel. But if you have 10 transactions per year, that's fine. You can do yourself. You can make like your own Excel and upload this Excel to self-assessment. So that's going to be your report, and your calculation. And HMRC, which is the government body who where you have to send this self-assessment tax return every year, they don't have tax specialists at all, basically. So they trust tax advisors, they trust accountants, and they trust these softwares, like a Conley, to this software is compliant to tax regulations in UK. So in that case, they not even check this Conley transactions. They trust, but you as an investor, you have to upload this complete tax report to your self-assessment. So basically, this software can help you calculate it, and they show you how many transactions on this report are on your case per year, proceeds from sales, so disposals, because capital gain tax, and cost of purchase, and profit, loss, and then gain. So from gain, you have to pay tax over £3,000 tax-free allowance. So if you, for example, if you are holder, you don't have to declare anything, you don't have to declare costs, you don't have to pay taxes. So in UK we call holder doesn't pay tax. So basically, if you are keep holding or keep buying crypto, but only from fiat to for example, if you buy bitcoins every month and doesn't exchange bitcoin to any other crypto, you are fine, and you don't have to declare anything.
I would like to maybe ask about this aspect or difference between people who are making self-assessments by themselves, because you have mentioned that some people, they do that using, for example, Excel, and they send it to the tax authority, and some of them they're using software. Have you noticed any difference in treating, evaluating such as self-assessments from the tax authority side, or because of, you also have mentioned that tax authority, they do not have let's say very native in crypto tax specialists.
They have tools basically
I know, but do you see any difference whether you are sending this tax self-assessment by yourself, made by yourself in Excel, or whether it is sent directly from the software, or the treating is equal?
We basically doesn't have any situation like that. So my company do that kind of taxes for our clients last 4 years, so we do thousands of returns, and wasn't any even one check from the HMRC, so they never ask for explanation.
Sure, because being an investor in crypto space, of course, it can bring you a lot of benefits, incentives, but sometimes, unfortunately, you may face different challenges, let's call it that way. So the question to Maciej Grzegorczyk, because participating together in many conferences, we've been discussing one of the major challenge for crypto investors, mainly banking restrictions. So, Maciej, do you believe that MiCA and other EU regulations will finally put an end to issues like account termination and frozen funds, or the other way around?
Not at all. Nothing will change. Banks still hate crypto industry. They find it as a competitive for them. So in the future, I predict that crypto exchange companies, they will still face issue with setting up a bank account. Right now, I see almost every month that some crypto company gets termination of a bank account. And you know what we need to do? We need to sue banks directly, to the court, to just secure these bank accounts. For the last 2 or even 3 years, we've already won some big cases that banks cannot just terminate bank accounts. On the other hand, with individual investors, these blocking bank accounts, it's quite rare. So if you just trade on a spot market, then you shouldn't have any issues with that, unless you do a transaction as a P2P, because with P2P transactions, there is a huge risk that you may be involved in some money laundering, that the other side of transaction may not be real, that some fraudsters get access to another account. So if you are just an individual investor, you stick to a spot market, then you shouldn't have either termination of the bank account nor blocking your bank account as freezing from a prosecutor.
So maybe also some question, because we are all here and we are great experts. I would like to get as more practical pro tips for the audience as possible. So Maciej, from your experience working with individuals, if there is, for example, an individual investor who invests in a non-European project or is trading on non-European tax or DEX and then exchanges money or receives money, have you noticed any problems with bank accounts when the money comes from non-European entity to European investors' bank account?
Yes, definitely from non-European bank accounts, if you transfer money, especially from some tax haven, then Polish as well as European banks usually just freeze just for safety, and sometimes they terminate this bank account, and you may be surprised what is the reason. The reason is quite simple. They just say they cannot follow security measures, and that's just a general clause. They don't say why exactly, what's the reason. They even don't ask specific question, or if they ask some questions, they are not just satisfied with the answer. Every time banks says that it's not enough, that we should provide more and more information, and it's quite weird because these transactions are connected usually with a blockchain. So let's say that you raise invoice because before that you make some service that is connected to crypto, and it's all visible on the blockchain. It's never enough for them. Always they need more and more. So I assume nothing will change for crypto companies. For individuals, it may be better. I hear from some lawyers that they say, while you get this authorization from supervisory authority, then banks will not terminate these bank accounts. But I don't agree with it. I think they will still fight for this internality financial system that crypto cannot access it.
So maybe last question in regard to my previous question to you, Maciej, because maybe also from your practice, what if you could share what could such an individual investor does in this situation, do in such a situation, as you have mentioned, blocking bank accounts, blocking funds on bank account. What is the easiest or the first step such investor should take?
The first step is to answer yourself, what is your source of wealth, what is your source in that transaction, and provide to a bank invoice, provide agreement, etc., as well as a hash of transaction if it's connected with crypto. Then bank shouldn't have possibility to send this information to a prosecutor. That's because it's not involved in money laundering. That's the first thing you should do. Just provide as many documents as possible to do a pure explanation that this transaction is not involved in money laundering.
So send some information to the bank, especially when you have a relationship with the bank. This type of transfer will be common, especially if we have above threshold 15k or 10k euro. And in this situation, practically approach this situation. So they wouldn't be surprised, and as Maciej said,
Yes, but in crypto companies for individual investors, we did that in Millennium and in Santander, and you know what they said? We don't have procedure to do a notice for such transaction. That it will come. So sorry, I get a notification on a telephone, but I cannot do a notice in your history.
We don't have to explain anything.
This is what I said. It's like it may be helpful.
Yeah, it may be helpful.
Maybe.
In some situations. Because now we have been discussing mostly the Polish situation. Probably it also applies to other jurisdictions because the situation is not that clear and that easy in majority of European states. But maybe let's have a helicopter overview over Europe. Because also, if we are observing what's currently is going on in the regulatory landscape, comparing, for example, to current moves in the US, Artur, do you think that EU stand a real chance for becoming a global leader in crypto regulation innovation? Also having in mind those voices, political changes, regulatory changes, and mindset changes taking place in the US.
We might, but in a long shot. So right now we all hear about Trump, executive orders, crypto meeting in White House, things like this. But US is very different than Europe. In US, when we have case law, like for example in UK, they are not waiting for any specific act of law or any specific regulations that helps crypto, but deals with executive orders. However, they are enforced as long as Trump is enforced and he doesn't change his mind. So in the US, when you compare the market and the regulations that we have over there and Europe, you need to realize that US are like 5-6 years behind us. So what they do right now they are figuring out the regulatory position, the SEC interpretations, things like this. Things that we did like 6, 7, 8 years ago when all the FCAs in Europe were wondering how to interpret tokens, what are security tokens, things like this. In US you don't have one security law, obviously you have an act on securities, but you have what's called Howey test. So this is the case from 1947 that stipulates how to interpret the contracts that they are or they are not security. So that means that basically because of the Howey test, all the contracts that one of the sides is promised some kind of incentive, some kind of profits from this contract, it may be treated as security. So even if Trump decides, not SEC anymore, if Trump decides that he doesn't want to pursue any crypto companies, still you have a problem with how it is, and at least for next 2, 3, 5 years we won't have any real legal changes because it's not so easy as to do it in Europe. You will be threatened about being a security, and most of the big companies don't allow US investors, for example. There's a huge problem for international companies. And even if they start figuring it out and start preparing some regulatory positions, it will take months from now to have something that is prepared enough to put it on the market. And we did this work a few years ago, and obviously with MiCA there's a problem that we did a step too far. We over-regulated like we always do in Europe. The position was that if you invest in crypto and you invest in shares or bonds on the capital market, you should have the same protection and the same rules. But someone in the commission forgot that the technology makes the difference. So it's not one-to-one, that it's just a matter of technology, it's a matter of the whole context and the way of investing. So right now we are a bit shocked. Right this year, maybe next year, when the first licenses will start to appear in Europe, and then probably the market would be used to this new world of regulations, and then the money and the companies will start to going back to Europe. But probably for this 1 or 2 years that we have right now, we'll have domination of US.
Also, maybe I will go a little bit deeper and ask about the role of Poland in this whole landscape, the European landscape, taking into account that at the beginning I do agree that we have now a little bit chaotic time. We have new regulation, nobody knows how it's going to work on a daily basis, right? We don't know how complicated the MiCA's procedure is going to be, how long will we wait, because everything is new. Do you think that Poland has some kind of incentive, something that could make Poland actually being a leader in the European landscape, having in mind that we all do believe that it's going to be the regulation of European regulatory landscape? Does Poland have something that could actually bring business, startups and crypto companies here?
It had 10 years ago when crypto and blockchain businesses were booming in Poland, but not anymore. I think that because of the personal views of two people from KNF and National Bank of Poland, so I won't say the names, but you know, we all know who we are talking about. So those are the guys that are anti-crypto, and they will not allow the opening. I mean, 2 or 3 days ago we had an article from one of them saying he doesn't like brokerage houses to apply for MiCA, and the brokerage houses allowing MiCA transactions.
Yeah.
So you can see if one of the most important regulators in Europe is saying that despite of MiCA, despite of any law, he's not keen on going for the regulated and traditional business going to crypto business. We shouldn't expect anything more that we have right now. I'm still hoping for this big case against the banks, because I think that will change a lot in the minds of banks and lots of regulators.
I think also, just making a short comment, what has happened in France, mainly implementing a law that obliges all banks to open bank account for crypto companies. So if you cannot get a bank account in France, public banks are obliged to open it. So it's a game changer. Maybe it's going to be a beginning of movement in Europe, hopefully, because otherwise having a business without bank account.
I mean, theoretically, you have similar regulation in Poland. For many years you have PSD2 directive, and in Payments Act in Poland you have obligation to allow other companies from payment industry, including crypto business, to have bank accounts, but banks will always find a way to say that it's money laundering.
Internal procedures.
Yeah, they will always find something. So the strict regulation doesn't change anything. You need to have a different set of mind and a different policy, and we'll need to wait, I think, 3.5 years. In Poland for the new Germans, those 2 key institutions to change, and then probably we'll have it a little bit different. And we need to understand that all the administration regulators, they need to be used to those changes. It won't change from day to day.
I was going to dedicate you next question, Pavel, but I see you would like to start with a comment.
Just to say, I mean, I think a little bit, Arthur, when you say this, is a little bit like gloomy outlook. I don't think. I mean, what I see is a couple of things. We have great entrepreneurs, right, and like people who, I know Maciej stories and like fighting against banks. I mean, this is something that we basically as industry we need to do this, right? And we need to play this game. That's like not maybe the nicest game, but at the same time, when you I mean, I did some statistics on people, adoption in the country. Right? We have around 4 or 5 million people in Poland who are in crypto. It's much more than all the investment accounts which you have in the banks or brokerage houses, right? Which means that people actually care, right? People actually are exposed to this already and they understand the risks. Right? And I think this. Like if you say 2 people who are against this, I think we need to be slightly more comfortable that we need to fight it. And I also see, from our side, like there's some, when you put this number in the right context, right, and maybe as an industry we should be talking more about this, not as just a risk but also opportunity, right? And also, when you hear Manson, talking about technology, right? So a couple of things that we need to do as an industry, and I think like we get to the point that more and more people say that we don't care, right? At the same time, I see many businesses from outside Poland or outside Europe coming to Europe through Poland, and there is a reason for this, right? So a couple of things that I tend to agree that it's like it's difficult, right? But like find me other business which is which brings you money and which is not difficult, right? I mean, this is reality, and this is something that we need to be more comfortable fighting. This is, I think, reality.
And because unfortunately we have only less than 3 minutes left, and the discussion is super interesting, I would like to ask you to share one final thought. What's, in your opinion, the biggest challenge or opportunity in the regulatory area in Europe in 2025?
Stablecoins, big time. It's gonna be game changer. It's effectively, we gotta get to the point when less and less on-ramp will be happening through the banks. That's reality.
Yeah.
And this is where banks become irrelevant, right? And this is something that exactly where we're gonna see game changer. I think by accident it happened. Then by accident, stablecoins will be very big topic in Europe.
Thank you, Maciej.
I think CBDC is the biggest problem and challenge that. Challenge. Not the problem, because this is a solution, for digital money, digital currency. It's not crypto, yes, of course. But
explain what is CBDC.
It's totally different than normal crypto meaning. Yeah, CBDC, it's gonna be the for government. It's gonna be system to check people how they spend money, and they want to control this. Yeah, and this is a plan who they take from long time. Yeah, to work on it. And basically, I don't like it as well, of course, but it's coming, and this is they want to rid of the cash, because they cannot control the cash. And what they're planning to do is make that CBDC, and first of all, they're gonna try to test it for poor people on benefits, because those people doesn't have a choice. So they're gonna take this CBDC as a first test group, but we don't know when that's gonna happen, but it's coming.
Maciej?
Right now in Poland, more people invest in crypto than they are on a traditional financial market. So that's the challenge for Polish Supervisory Authority. Yes, and I think in the future they will try just to change this statistic. They will try to do some new, maybe tax regulation, maybe some new tax exemption, like in Czech Republic, that investing, some kind of investing that make you capital gains can use this tax exemption. For crypto, we proposed in the sprawdzamy mechanizm of Rafał Brzoska MiCA, that crypto may use also such tax exemption if you hodl this crypto for more than 3 years. I hope that it will make crypto more friendly for traditional investors, that they will the number of these crypto investors will be even bigger.
Positives, opportunities, great. Artur, last thought from you.
So I'm not so optimistic about Polish market because this year is very challenging and it depends when in which direction we'll go. So right now we have MiCA. We're trying to figure out what will be the MiCA implementation in real world and what will the supervisors do with those license applications. But I think for this year and next year we have two main challenges as well. One are security tokens, which we are still waiting for clear interpretation because security tokens are not covered by MiCA. And second thing are real-world assets, which are not covered by MiCA as well. And we are still waiting what will be the interpretation, in which way it will go.
Thank you very much. Thank you for...
One more word, like if we imagine, Artur, if we have new president Manson, and
God knows.
Okay, maybe let's this discussion continue in the foyer on the venue. So we would like to ask some more questions or make a comments to our panelists. They are going to be available in the venue, in the foyer. Thank you very much for sharing your expertise, and thank you, dear audience, for being a part of this great discussion. And I wish you a great day here, and please enjoy the rest of the conference. Thank you.